Hello and welcome to the Midweek Market Update, where we dissect the action of the week and see what that means going into Friday. If that's something you're into, stick around. All right, it's Wednesday. Happy Hump Day, everyone. And yeah, I hope you guys had a great Memorial weekend. Nice 3-day weekend. We didn't do a week ahead video, but back at it here with a Wednesday video. A lot of action today in the portfolio and just abroad. We had a couple things happen where, Tempest AI got hit with a short report. Stock went down like 19%. And I'm just noticing a lot of things on Twitter or X, all the comments are just like, I'm buying the dip. Who's buying the dip? Nancy Pelosi's buying the dip. What are we doing? Buying the dip. So I'm a little worried about Tempest AI because, it's just normally on these short reports, you see a wick. We didn't see a wick at all. And everybody on social media was saying they're going to buy. So I'm a little bit wary about that. Another thing, after hours, we had ELF's earnings. I guess they're buying Haley Bieber's like Road or something for $1 billion. Stock's down. That was kind of an easy one to tell it was going to go down. Later on in the video, I'll show you like it was extended off the quarterly moving average and there was no way it was going to go up, and it mooned into earnings, so it's going to pull back. And then we got Nvidia earnings, I think, after the close here, and I guess initially it's up a little bit, but we'll check it out. That's kind of the news of the day. So let's check out what the market monitor has to say and see what's setting up going in the end of the week. The market monitor is a collection of data that I've taken over time. That, combined with established strategies by William O'Neill, Richard Wyckoff, and Stan Weinstein, I could use it to peer into the market to see where we're at in the cycle and where we could be going. I'm going to use this data to cross-reference the averages. So if this data is above average or below average, that should tell us something about where we're going and where we've been. By knowing that, we could set an expectation, and if that expectation is met or not met, we can make decisions based on that. And that's why the market monitor is a crucial part of my investing process. And I hope you guys can get a lot out of this segment. And if you want to know how the market monitor works, I'll link a video in the description below. It explains everything. Cheers. All right, so we had that powerful day yesterday for after the 3-day weekend. Market monitor is still yellow. We're day 5 yellow, so getting close here to the end of it. We got 5 distribution days, including today. So today we were down like 0.55%. On average, yellow is about 9 days long, and it goes down moderately. Maybe like 0.03%. So we're right around there. What the expectation, the average of this kind of cycle should produce. If we have one more distribution day, we're going to go to market monitor red cycle, which means we could go down another 2% from here. We're just monitoring it, and it's not a good sign when you get action like yesterday, which is like a follow-through day kind of action where the market's up 2%, and then the first day after that it's down. That's typically pretty bearish action. So other things to note, the breadth in the market came down a lot. The stage 2 stocks, some short-term momentum indicators are still ticking up. Most of the stocks ended at the lows of the day today. The anxiety index is starting to get down to, very docile levels, 22K here. I thought we were going to rally this week and then maybe start going down Friday. But because we had such a powerful day on Tuesday or yesterday, that could change. Of course, with Nvidia's earnings, it could change on a dime here. But just starting to see a little bit of weakness. I think we can go into a down wave here. And so that's kind of what all the market monitors saying, really, that moderate pullback is required. And if guys are starting to come out with short reports and the stocks are moving, that means it's like market's not in a strong bullish position. These guys who are obviously issuing these short reports, it's a good time to do that. You know, they don't issue short reports at the lows, right? So so sweet. Let's get into the I normally do a portfolio update at the moment, but the website I use is just it's totally broken at the moment. Where yeah, all the stocks that I have sold calls on, it doesn't like the website stopped you know, reporting it. So there's just I mean I could show you guys, but it's totally wrong. Like all the positions that I have that I've sold calls on are no longer being tracked or synced up with that website. So um, yeah, once they fix that, we'll keep doing the portfolio updates. But yeah, we're still great. I mean, I'd love to do that because like we're up pretty good on the year now, because we had a good day yesterday, good day on Friday. We're on these nuclear stocks that are just going crazy. But yeah, once that gets updated, maybe on Friday, I'll show you guys what's going on there. But yeah, let's take a look at some stocks. All right, so what you're looking at here is the IWV, or the Russell 3000 index, ticker symbol IWV. And yeah, basically what I did here was I wrote or drew with these little lines the cycles, right? And the length on average. You know, I don't have the standard deviation of, you know, how much they deviate from that average, but this is kind of the expectation. And then I drew in a little target price right here, around June, I think it's 20th, of where I think the market should be, or the expectation based on the market monitor where the market should be. So yeah, you know, like I've said in previous videos, it's just time to sell calls and make money off of the market going sideways. We had a big move, and we just need to digest. So how do you make money when the market's digesting? You sell some calls. You don't buy puts because you're gonna lose on the premium. So yeah, we're just letting it do its thing, and this is kind of the expectation. So unless, you know, we get another distribution day tomorrow, I'll change that. So once the cycle goes to red, I'll change these things around to reflect that change, and that's kind of what we do. You know, just we react to what's happening and then change the model based on what's happening. But this so far is the expectation. Yeah, so maybe it bounces or pulls back, you know, like 4% before the next kind of buying opportunity, or, you know, buy back the calls and stuff like that. So let's go to the moves of the day. So yeah, Tempest AI, big move, short report, just went down all day. You know, if we look inside here and we look at the intraday action, you know, it never really had any reprieve. Um, just an all-out bearish day. And then, you know, when you go and you look on social media, like everybody's buying the dip. Like obviously not. I mean, there's a lot of volume, so it is a little bit bullish. The fact that this candle, you know, if we go back here and we even looking at this candle right here, we do a comparison. That candle's down what, like 5%? So this candle's down 4x. Or actually, let me see here. Yeah, that candle's down 8%. So this candle's down almost 2 and change x, and yeah, the volume's only up 170% compared to that candle. So, you know, um, it's a lot of volume. It's the most volume it's ever had on a downside day, closing at the lows. So you have to think that it's bullish. But the fact that you look at social media and everybody's wanting to buy the dip makes me bearish. Okay, so, you know, and then let's look at this candle right here. Yeah, it's down 12%. So, I mean, hey, I think it could be bullish. You know, we said the same thing for Baidu, and it's still kind of hovering below that candle. It just really depends. You know, whenever you have these big momentum candles and there's massive volume, it really depends on where it's at in relationship to that candle. If it bounces and it sticks inside the candle, that's very bullish, right? Because there's no follow through, and then you watch the follow through of the candle. So if this thing can break below here and continue down, that would be very bearish. So we're just gonna have to monitor it. Yeah, I mean, it's ending at the lows, heavy volume, downside. Social media says it's buying, so it's iffy at the moment. Yeah, so let's take a look at ELF. I think ELF is let's see, where's ELF trading here? Yeah, ELF's trading back at 86, so it's down moderately. I'd sold the 85 calls, so we're doing pretty well on this. Yeah, and what I wanted to show you guys as well is, like, if you look at this indicator right here up at the top, we are 40% above this quarterly moving average. And if you go back in time, I mean, literally, throughout this entire uptrend when the stock went up 500%, it was never that extended from the quarterly moving average. So it's a very extended stock on a short-term quarterly basis. So, going into an earnings event, of course it's going to sell off. It's just a given, because everybody bought it too much, based on this indicator. I don't think the odds are not for it to break above here on a quarterly basis. Maybe on a yearly basis, yes, it can get above that when it's trending. But literally the only time it had ever gotten here, it went sideways for months. So I think ELF is a selling call stock for a little while. It should back test. What it reminds me of? It reminds me of Celsius. This sort of a thing where Celsius goes up here. It gets to where was this? Let me delete that. Yeah, Celsius gets to 30% above the quarterly moving average, and it's literally done nothing for 2 months. So, it's a very similar vibe. ELF is to Celsius, so we're probably just going to go sideways here, let this moving average catch up. Yeah, that's kind of the game plan. It's the same thing as Celsius. So, so that's that. Yeah, still decent. I'm still waiting on, let me see, Nvidia earnings. Nvidia's up. So, hey, maybe tomorrow we do an up day, and then Friday it's a down day. So we'll have to figure that out. Another stock I was waiting for on earnings is this apps. We'll see what happens there. And then what I wanted to do today was someone had requested, a viewer had requested me to do some analysis on Bitcoin, and in particular a Bitcoin income fund. So if we look at like IBIT, which is the Bitcoin ETF, so let's just do some technical analysis here for a couple minutes here, and just learn how to identify good opportunities to buy and what to watch out for, and how to kind of see if there's going to be a pullback soon. So what we look for into an up wave is an increase in volume and a decrease in the spread. Now, what do I mean by spread? I mean when the candle, when it opens and when it closes, and the high and the low, that's the spread of the candle. So if we notice here on IBIT, and it's a little deceiving, like the volume on these ETFs, because it's not the actual thing, but it's just roll with me here. You see this spread here was 7%, and it had this much volume. So that's kind of like our baseline of like, okay, this is how much volume can push this thing up, okay? So whenever we get to something like this, where we have the same amount of volume and the spread of the candle is small, that catches our attention. Now, since this was a gap up, we kind of have to look at it a little bit differently. But you can tell that down here there was way less supply than here, because this thing was able to move further on less effort here, okay? And this thing was able to move a little bit smaller on the same effort. Now, look here. We have more than both of these volume spikes, okay? Right here. And this candle was the smallest of all three. It was only up 2.5%. Okay, so we have like, 1, 2, 3, 4 main candles that you can identify in this wave to look out for, right? So you have this main selling climax, this big volume where the market was down, let's say 7%. This is when a lot of people were buying, a lot of the smart money was buying, and then the smart money pushed it up, okay, to defend their buying, and that initiated the trend. Okay, so big volume comes in at the lows. That's when you want to buy. And then low volume, they're holding. and it's just kind of gradually trending up higher. This is what you like to see: low volume when it goes up higher, low volume when it goes up higher. But then and then a spike midway through to push it over a key average. That's ideal, you know, out of this average, boom, because there's going to be a lot of sellers at that average as well. So boom, and it closes above this candle with the big volume. That proves that the market's going to keep going higher. Then the next thing you look out for in terms of ending a trend is the next high volume spike. So now we have this high volume spike. This is the candle. This is the important candle to watch. And so once it gets back into this candle, like everything was bullish, okay, on this candle, now it gets a little bit sketchy because the volume's coming in here and it's coming back into this candle. And now on low volume, it's starting to undercut this candle. That tells you there's a pullback that's about to happen. Okay, so if we get below this, you can have a pullback. And then how much is it going to pull back? You look at this, how much it typically, where it finds support when it's trending. So you go back to here, how much percent do people need as a cushion to start buying this thing? So you could see here that when it makes a move, people like to buy the pullback after, and let me just find here, an initial pullback. So right here, so what's this distance right here? So let me see here. So it's about 7%. So 7%, and this is another dip buy here, and 20%. So let's just average it out. Let's say 10% and 20% is where people like to buy the dip on Bitcoin. At least the distance from the quarterly moving average. Okay, so what that means is if we look here and we look at this, let's go 10%, and we could put something here. Oops, let's put something here, 10% as a buy the dip, and then also 20%. So it's already right here. So it's not going to trend as extensively as the other one. So the buy the dip opportunity would be this confluence here with this wave. So right here, I can go here, and that's what you look for. So we have the identification that the trend is pretty much over. Okay, like this nice trend right here is over because this volume came in. So I would expect it to pull back here, and this would be the next area where you could buy. So now what does that mean? If we go and look at these income funds, same kind of a thing, you know, a lot of volumes coming in here, but it's actually nice. So this is a Bitcoin income fund where they sell covered calls. So actually, like if you're looking to buy like Bitcoin, you know, it's probably a better idea to buy an income fund knowing that the market's going to go sideways because they've had calls sold on it. You know, so if you don't want to actually do the buying of the IBIT ETF and then sell the call, you could just buy the ETF fund that already has calls sold, and so it won't go down as much as the actual Bitcoin ETF. So yeah, that's just a little you know, little bonus. Well, thank you to the viewer who asked that question and wanted me to review Bitcoin. But yeah, I mean, I would just say like a nice, so from here we're looking at a 6%-ish pullback would be another opportunity to buy. So with that expectation, let's say you have 10 to buy with, $10 to buy with. And there's a probability that this happens, and there's a probability it doesn't happen. It keeps going. There's a probability it keeps going down. So with this information, you kind of have to calculate, okay, how much do I buy at a time? You know, it's kind of close. So let's say you have 10, you buy 2 today. And then if it goes down here, you buy 3. And then if it bounces off this area, you buy 2 more. And then if it continues, you buy 2 more. Or if it continues here and it breaks expectation, you don't do anything. You wait because your expectation was broken. And then you still have, let's say, 5 left to buy. Stuff like that. It's not an exact science, but that's kind of the concept of how you know, are buying these things correctly. All right. So that's all she wrote for the midweek update. And I'll see you guys on the next video. Cheers. Oh, and hey, if you like this content, feel free to comment, ask questions, and I'd love to check out your suggestions, and like and subscribe to the video. Thank you guys. Take care.